For more on the SPAC market and capital markets in general, let's bring in Jeff Solomon, Cowen CEO. Jeff, good to have you. Welcome.
Good to be here. How are you, Sarah?
Doing all right. Wondering what your sense of the market is, especially with regard to SPACs, after you got this huge deal today that sort of flopped, and we have seen increasing regulatory pressure. What does the market for SPACs look like at this point?
Well, there's a lot of SPACs are high-profile SPACs. Like this is the largest one ever, so all eyes are on it. The truth of the matter is that there's many deals that are going on. Right, there was record issuance in the first quarter, and then there was a big slowdown with the SEC taking a closer look at some of the accounting. But there's been a bunch of deals that have gotten done in the back half of the year. Over 100 of them have gotten done over the past 6 months on the back end, and I actually look at really how's the health of the pipe market and whether or not financings are getting done in conjunction with those. That's usually the gating item that kind of keeps a reasonable amount of a gate on the whole SPAC issue market. So I think from my standpoint, I think again there'll be ebbs and flows, but things are pretty healthy.
What about broader? So tie it to IPOs and M&A. Does it feel like the window is closing if the Federal Reserve starts inching toward an interest rate increase?
I listen. The Federal Reserve did what it had to do in the face of an unprecedented, pandemic, right? So if you think about the entire global economy shut down, so they did exactly what they had to do. As things start to turn back on again, there's going to be fits and starts, and the Fed is going to ultimately have to raise rates again, as are most central banks, because we're keeping them artificially low to keep the pump primed, if you will. And so I think what we're seeing in the market today is sort of this, how fast is that going to happen? And so I still fundamentally believe, even if we get back to 1% or 2% short-term rates, it's still a great environment for stocks and still a great environment for capital formation. When you're thinking about the long-term return on equities, is still the best market to be in.
Jeff, when you look at the M&A activity that we've seen, the IPO activity, capital markets in general, two questions. Do you think that's going to continue and maybe even grow from here? And do you get the feeling that it's a bit of a sort of last hurrah, late cycle chunk of activity or not?
Well, it's hard to say. I mean, and the reason I say it's hard to say is because we've never really come off the back of an unprecedented global shutdown, right? So hard to know where we are in terms of what we might consider to be normal cycles. What I can say is at Cowen, our M&A backlog is up double digits after over 2020, and we had a record year in M&A. So I don't think that we're going to see a meaningful slowdown in advisory. It just doesn't feel that way to me. Things are getting done. Sponsors are monetizing their positions in their portfolios. They've also raised gobs of money and new funds are being deployed. Money's still flowing to venture. Money is still flowing into healthcare, private companies, even though the healthcare market, in particular biotech, has had the worst year it's ever had. So it just feels to me that, again, we're going to be in a low rate environment for a while, even if the Fed does increase rates. And the long-term trend is that you've got to go somewhere for growth. And that's been our theme at Cowen. So we think that M&A, particularly in the sectors that we cover, which tend to be a little growthier, where there's some sort of consolidation going on, those seem to be pretty strong. And I wouldn't bet against there being an increase next year.
Talk more about biotech and healthcare, because I think you see some opportunities here.
Yeah, I mean, it's been the worst performing sector. I think Mike Santoli said so. There's been a lot of terrible bear markets. We're in the worst bear market in biotech we've seen since I can remember, right? If you look at that index relative to other indexes. And I think there's going to be a lot of continued tax loss selling perhaps here towards the end of the year. If you're a long-term investor and you have a great thesis and you love your names, this is probably the best time to be adding to those names because you're getting them at ridiculously cheap prices relative to wherever they've traded, even over the course of the past decade. So, I'm not going to call a market bottom. I'm just going to say there's a lot of technicals at play here in that sector that make it really compelling because historically, this is a mean reverting sector. And if you look at the great performance we had in 2020, it's not surprising that we did not have such great performance in 2021. So what does 2022 bring? Look, it's going to bring something, I think, that's a little bit different, particularly off the back of positive catalysts.